So welcome once again to our webinar series. We are going to cover 5 rarely used features. So there's always like the top 5 or our 5 favorite or the 5 most productive, or there's always top 5s of features that I like to cover. But this one we're going to hit on some that you may know about, you may not know about, but in any regard, a lot of these features that we're covered today have been a benefit for individuals, or they've thought maybe they would have to have a custom script to do stuff, or have to export data out of OpenAir to be able to do reporting when the features are available inside the tool already. So I hope I'm getting you excited for this webinar. The 5th rarely used feature that you may not know exists, okay? And it has to do with a custom field that's called a conditional dropdown custom field. This feature came out, actually, believe it or not, in 2012. And what it allows you to do is define a dropdown field, standard dropdown field, but you can then make that dropdown field drive the contents of another dropdown field. So if you picked things like you had maybe a region, like a country, you had North America as a country, and then you wanted another dropdown that had the different states or different provinces or different regions, you could actually say, okay, the first drop-down field is North America, and that would drive the content of the second drop-down field, which would be all 50 states. Or if you picked something like Canada, it would have the different provinces as the secondary list and the drop-down. So it's a unique feature. I don't see it used very much. That's why it falls into the rarely used category. But it does come into play when you're dealing with trying to combine 2 fields together and prevent people from putting wrong data in field 2, because whatever they picked in field 1, they have to put something in field 2 that's related to it. So you can usually solve that problem by putting a lot of form permissions, form permission rules on a form. But if you use this conditional drop-down field, then it makes your life a little bit easier because everything's controlled in the definition of the actual field itself. This drop-down fields come with OpenAir. That's not a problem. But to turn on the conditional drop-down field, what that means is it's a switch. The switch is listed here, so you certainly can have a copy of these slides if you want. What it allows you to do is it basically turns all the drop-downs down into this conditional drop-down field. So let me just show you what that looks like. So when you define the drop-down field, for example, like contract type, you give it a list of values just like normal. So from this point of view, at this point, it looks the exact same as any other drop-down field. However, if you click into the values list, the values list comes back up looking something weird like this. Like each individual field is actually a text box, and you click into it, you can delete values from that text box. If you click on the plus sign, you can add values in. You can drag and drop things around to reorder what's in there. So it's a little bit more robust than a normal drop-down field. So this is the first part of it, which is like you create this drop-down, and the drop-down editing is a little different than a standard drop-down. But the conditional piece of it comes when you pull in something like country or region, or however you have your organization structured, and you basically drag pieces of the dependent custom field into the primary custom field. So in this example here, we have the contract type internal, and the regions that are applying to, that apply to this are ops, tech ops. Some of these things are made up in our sandbox with the exec ops and biz ops type thing. So how this would work on a form is the contract type field would have internal selected. And then in the project region field, the only things that would be available are ops, tech ops, exec ops, biz ops, right? So that's how you can actually drive the definition of field 1, driving the content of field 2 with this conditional drop-down custom field feature, okay? I should mention, if you have any questions, we have like a chat window, or I think there's a Q&A session too. So feel free to throw those in there. I'll kind of keep checking them along the way to make sure that we've got some questions, and I'll answer them when we stop the recording in about 30 minutes. Okay. The fourth field is actually another custom field feature. This is one of the ones I use quite a bit, actually, and it's called the allocation grid field. It used to be, for those of you who have had your OpenAir system for probably 6+ years, this field may not actually even be enabled. This option may not even be enabled. If you're one of the newer, when I say newer, 6 years seems still like a long time, but if you've gotten your OpenAir system within the last 5 years, you probably had this custom field type already turned on in your system. And really what it equates to is it gives you basically a way to define multiple fields in one custom field, multiple values in one custom field that hold a percentage. So you can think of things like the way we use it here at TopStep, we have like a weighted probability of closure. And that is something we just put the percent in according to our business process. And that's how we track the percentage of closure on our projects. The benefit of using it, though, is that this allocation grid feature, when you turn it on in a report, it gives you pre-computed reporting values for the values that you have in this field. So you don't have to do custom calculations that are multiplying something on a project times, like a numeric field that holds a percentage or a drop-down field that holds a percentage. Those of you who have tried to use sort of project detail fields in calculations and then try to roll that up across projects, it always ends up having a bit of a challenge because the roll-up can't be understood in a report. If it was something related to a percentage, you could use this allocation grid and you could force OpenAir to actually pre-compute the values for you. I'm going to show you that on the next screen. And that way everything rolls up because it's just another reporting value. So it saves you a step in custom calculation, and it saves you a bit of a headache when it comes to sort of rolling up and grouping on those cross-tabbed and summary reports. So like I said, a lot of the systems have it today. Part of this custom field feature, though, also supports the ability, since it is a percentage-based grid, and it's called an allocation grid, it also gives you the option to say all the values or selections that you put into it have to equal 100%. So now you can think of things like, okay, so I'm sharing this project between two different organizations as far as revenue. So Department A gets 50% and the other department gets 50%. Or we're doing commissions and the commission breakout is 10% to the engagement manager and 30% to the sales manager. And so anything that has a percentage where you're wanting to sort of compute a resulting value of it, allocation grid works out nicely for that. So the allocation grid field definition looks a lot like a drop-down field. You fill in all the values. The value list is basically the options you can pick in this grid, okay? And the values you can pick in this grid then support the ability to put a percentage next to that value. So this is from our system, from this sales probability, we actually track proposals and stuff in our OpenAir system, and we give it a sales probability according to the little hint here is our interpretation, is our business process. So if we have sent a proposal out, then we enter 50% in this allocation grid, and it actually gives us forecasted billing that's already weighted by 50%, okay? So if you look at, like, here's what the field looks like on our project properties page. So we put a percentage in there. You can type anything in here, but we have, like we said, a business process. And then when you go to do reporting, you basically turn on an option inside the definition of the report saying include allocation grid generated fields. When you do that, every financial reporting value has a twin or multiple values that relate to options in your value list. So we only have one value list called weighted values. So we only see one allocation grid automatically computed values. So you see how we have projected billing, and we have projected billing minus weighted value of closure probability. So what this essentially does is if we had 50% in this field, we would get a projected billing value of X, and then the weighted value would be 50% of that. So it would be half of that. We actually use this closure probability to do a weighted forecast of our pipeline in OpenAir. Okay, so this value is automatically available in your system. And you'll notice, actually, I kind of skipped over it, but if you look at an option on this allocation grid, there's a checkbox option that says you can actually enforce that the values have to equal 100%. So that would be something you would use if you needed to sort of split something between people or between organizations or between something. So I see a lot of questions coming in, so I'm going to answer those when we stop the recording, just so everyone feels comfortable talking up. Okay. So I really like this feature. You don't find a lot of opportunity to use it, but every now and then there's something that you want to be able to have a percentage calculation, and that would support that. Okay. So my third favorite, or not favorite, I should say third rarely used feature. It's actually a feature that I don't think a lot of people actually realize is a feature or available in the system, and I kind of expanded this. I cheated a little bit, and I put a couple of different options here, and that's related to approval and rejection options with timesheets. So when OpenAir provisions a system for a new company, the standard approval looks like an approve button, a skip option in the middle, and a reject button on the right-hand side, and you're looking at the whole timesheet, okay? But actually, there's lots of different configurations related to this, and one specifically that I think people don't realize is available is something called a self-rejection option. I've never been a fan of the word rejection. I don't like to reject myself, but it's really a recall function. So what happens is when you submit a timesheet and you submit it by accident, who hasn't hit that save and submit button by accident and submitted a timesheet too early? As long as no one has approved anything on that timesheet, you can go in to the submitted list of timesheets and click on a reject action to reject it back to yourself. Okay. That is a switch, though. You do have to turn on a switch that says allow users to reject their own timesheets if no approvals have occurred. But once something approves, even if it's an auto approve, then that self-rejection feature is no longer available. Okay, so there is a little bit of a limit there. The other one I thought I would mention, though, is there are some line item level rejections. I see this used a lot in expense reports where you're rejecting individual receipts, but it's also available in timesheets. And timesheets can have a line item rejection where you're basically rejecting one line item at a time, or there's another feature on top of that line item feature where you have the action to do a one button push. And that's what I'm going to show you on the next screen. So when you do line item rejections, however, the line items have to go somewhere. So that's when you start getting into these timesheet split scenarios. So some of you may have this in your system already. If you don't, then really it's a matter of, can you deal with the fact that, you know, the person put a timesheet in and you rejected two entries, those two entries split off into a second timesheet. And so now you're dealing with two timesheets for the week. So that timesheet status report that you're probably running is showing multiple values in there. But there's also rejoin options. So once that rejected timesheet is resubmitted and approved, then it can rejoin back with the original. So there's lots of different options and combinations of that. But if you look on the next screen here, the self-reject option is what it looks like here. Is if you go to self-reject, you actually just go into the list of submitted reports. You should be able to see your timesheet in the submitted list. You're not under the waiting my approval. You're under the all area. For those of you who are on UI 4, phase 2, I believe it is what introduces a to approve tab. So if you're in that UI, you have a little bit easier navigation. But when you go into that submitted list, you can find your timesheet, open it up, and you'll see a reject button. If there have been any approvals to date, the reject button disappears, so you can't see it, okay? If you go into your system now just to see if it's turned on, you don't see the reject option and there's been no approvals, that means the switch needs to be turned on. And it is an internal switch. You do have to submit a case to be able to get that turned on, okay? Now, the line item reject multi-action thing looks something like this. So the line item rejection gives you an option to say, I'm going to approve or reject this individual row on my timesheet. Okay, and there's another feature on top of this line item that says, okay, I'm just going to go through the whole list and figure out which one I'm approving and rejecting. And when I'm done looking at everything, then I hit this one single button at the top, boom, approve and reject options. Okay. The reason this is a secondary option is because you can actually turn on the time entry line item rejection feature and still be able to approve the whole timesheet or reject the whole timesheet with the standard approve and reject buttons. So there is a little bit of a decision to make on whether you want whole timesheet control and line item control or just line item control, because this single button approve reject items action is it's always line item level. Okay, you won't be able to do it at the whole timesheet level. So so that's the feature there. Okay, moving on. Okay, number 2. Now, before I move on to number 2, I would tell you that I've actually discussed this feature with many customers. Some customers have found it very useful. Some have thought it would be useful, tried it, and then decided it wasn't quite what they wanted. So it's kind of a 50-50, which is why I put it in the rarely used category, because it's not the full thing that people really want. And what this figure is bookings created from task assignments. Okay. What this feature is all about is that you build out your project plan. Okay. And the enhancements to the way the project plan features work with the Gantt charts and stuff had made this a little bit more feasible of a feature, because this came out before the whole Gantt chart revision that came out, I think, in 2016. So what this booking created from task assignments feature does is, if you take the time to put your project plan together, you have dates, start and end dates or duration-based dates on your tasks, and you assign people to those tasks. You then have the option with a single button to say, okay, so I'm ready, create my initial resource schedule. Okay, so you've taken the time to basically build out your project plan. You push a button and it creates all the bookings. And from that point forward, you manage the schedule of resources in the resource module. Okay. This is an internal feature. It's called Enable Project Booking Automation. When you turn this feature on, it does open up or activate a workflow in the bookings area of the resource module. So now, instead of it saying list, grid, or worksheet, and planner, it shows things that open, submitted, approved, rejected, worksheet, and planner. So there's this workflow that gets turned on, but you can actually make that an auto approval by using an approval workflow with the word submitter as the approver, and that can sort of work around the automation, the workflow activity. Now, so if you've seen this before, this is how it works. You put the project plan together, you push this button that says create bookings for generics, and then it comes up and says, are you sure? And you say yes, and then it'll tell you, hey, this is how many bookings I created. So the reason that this always sounds very appealing is because if you take the time to do your project plan, or you use Microsoft Project and upload things, project plans may be a very simple way to sort of set dates up using the Gantt chart and stuff. And then you create your project, your bookings. That's a nice efficiency step. Okay. The downside of this one is that once you create the bookings, there's still no connectivity between the tasks and the bookings. So the bookings still live in their own world, and the tasks continue on in their own world. And so that's where this feature ends up getting complemented with maybe a scripting solution or two to sort of tie the two together again and make it a more fully functional feature. It's a nice efficiency activity, but it's not for everyone, okay? And especially if you have the type of projects where you're assigning like 50 people and whoever gets to it, you certainly don't want to use this kind of feature to push task assignments, to create bookings from task assignments. But it is available, and it's not something that's very obvious as a feature that's available, okay? Now, the final one that I want to talk about is one of my favorites. And it's called the cost adjustment based on utilization. So tracking cost in OpenAir, there's especially labor. This is related to labor, right? Like hours in the system. So there's always a need to, when you're looking at margin reporting, there's always a need to track an hourly cost per person, okay? And if you're not aware of it, there's actually an ability to track up to 3 different costs per person, primary, secondary, and tertiary. So that's a feature that you have to turn on. In the system, everyone comes with 1 cost value per person in the system. And this cost adjustment feature has been around for a very long time. It's just not very obvious where it is because it's attached to an advanced report, and you have to run the report first, then you can take advantage of the feature. Okay. So how this works is, and why you use it is, if somebody is a salary employee and they work a 40-hour work week, then the 40 hours that they put on their timesheet is probably very close to what they're getting paid from a salary or compensation perspective, or some general alignment with that. OpenAir is not a payroll system, as many of you know, so it tends to be more of a general, here's what the cost of this resource is to the company. But if that person works a 60-hour week, well, they're certainly not getting paid for 60 hours. Well, in most companies, they're not getting paid for 60 hours. But OpenAir does simple math, right? Oh, it's 60 hours. 60 hours times the hourly rate is 60 hours worth of cost. And so therefore, your cost gets inflated in OpenAir, and your margins, of course, reduce. And for some organizations, that is fine because they're looking for a margin value based on, if everyone worked the same week, here's what the margin would have been, okay? But of course, there's also the opposite side, is that we do expect people to work a little bit over, so therefore we want the cost to reflect the fact that we're getting some additional work for a lower cost. So we want the cost adjustment to be there so we can see closer to bottom line margin, like how much money did we actually make on this, regardless of the fact that people work really long hours on it. Okay, and that's where the cost adjustment comes in. I hear a lot of customers wanting the feature that says, I want to cap the amount of cost I can spend. So I want to cap the fact that they're only 40-hour-a-week people, right? This is essentially cap cost, but it's not capping the cost. What it's doing is it adjusts the value of an hour to allow for the total number of hours to equal the same cost if someone worked just a 40-hour work week, for example. Okay, and I'm using 40 as a standard work week. Now, I realize that's not everyone's standard work week. So what it'll do is it'll basically say, okay, so if you work 60 hours, then your hourly cost is going to get reduced by a percentage so that the total hours of the total cost of 60 hours is the same as if you only worked 40 hours. And that's what this cost adjustment feature does. Some accounting systems have like a cost normalization or cost adjustment feature built into their functionality. OpenAir has it, but it's attached to a report, okay? So there's not even a switch to turn this feature on. You have to use it by using the historical utilization advanced report. And when you run this report, it is meant to give you a utilization value. So that utilization value says, well, how much did you work of a normal work week? So if I worked 150% of a normal work week, it's going to be using 150% and realize, okay, I went over 50% than what I should. So it's going to use that percentage to reduce my cost, my hourly cost, and put an entry in my cost table. Okay. So here's how it works. So the report, everyone has this report, an advanced tab, percent historical utilization is what it is, okay? When you run it, you configure the report to give you a utilization that you would use as a baseline for adjusting the cost. When you run the report, you define the period of the report. In the example I have on the screen, I just grabbed 1 week, okay? So there's a bigger process discussion around using this feature. Where do you do it at the end of the month? Do you do it once a week? Like what period do you do? Because you can't just randomly run it and have it adjust every day. That might be overkill. So you run the utilization report, it gives you a percentage. And so when you get the percentage, then you click on the tips area and there's a little note that says, click here to adjust the user's loaded cost. Okay. So you click there, and then it comes up with a little message that says, okay, so I'm going to take and adjust the cost so that the fact that, you know, this is 135%, the cost would equal the same as if it was at 100%. So it's going to adjust the cost down so that the total hours for that week equal the same as if the person just worked a normal work week. Okay. Now you'll notice there's also a checkbox here that says overwrite existing costs. So if you want to run this multiple times for the same week or the same month, you can essentially just keep replacing the entry, because what happens is when you click on yes, go ahead and do the cost, it will say, okay, I reduced the loaded cost to this value and put a date range in the cost table for the period of the report. And so in the cost table, you'll see that on the user record, it reduced the cost to 66.36, and the start and end date were the same as what came from the report. Okay. So this is something that's useful when you have you know, folks that you want to do the cost adjustment at the end of the month so you can get accurate margin reporting, for example. Or you're not able to, like maybe it's has to do with something like capital expenditures or something like that. Okay. So this feature is nice. I like this feature. You have to have a lot of discipline around it because you are messing around with the cost table, but it's not overriding current costs. It's just entering historical costs in there. And you run it for a defined time period. And I always recommend that one person owns this, or one person owns it per team or something like that. And timing is everything, because it's utilization reports, and I have to wait for people to get their timesheets in. A lot of dependencies. And then of course, there's always the discussion about things like, well, if somebody put in 40 hours of work the week of, let's use a US holiday, like July 4th, and 2 of those days were holidays, they recorded the 2 holidays plus another 40 hours, so it's 56 hours. So do you reduce the cost then or not? So there's all those discussions about what's the value of an hour and when do you do the adjustment. So there's lots of discipline around this, but the feature exists. The feature exists in the system. Okay. I will let everyone know, if you are currently listening to this and logging into your system and you happen to have the report management interface turned on, okay, which is, you don't see summary and detailed, you see management instead. There is a current defect that engineering is adding this feature to the advanced report when you have that report management interface turned on. So you have to turn it off and you'll be able to see the feature. Okay, so that's well known. They're working on it. So it's not that you don't have a switch turned on or anything. It's just it only works in the older version of the report management. Okay. So that wraps it up to the I didn't know that wow factor that I thought I would cover for today. The top 5 rarely used features that people may not even realize are there.